Hello, what up, my people? Welcome to my YouTube channel. I'm Lamo by the name, and we will be documenting our trades for the year 2025 starting from this February on this particular YouTube channel. So we'll be starting with 100k funded next account. We will pass the accounts on this particular channel and we will be documenting each and every trade. So we have a new Telegram channel that we opened so that we'll be sharing our trades on a daily basis. So join the Telegram channel and you get our signal. So join me on my screen so that I can actually show you the trades I took today on my personal account. So starting out on this trade, um, this morning I actually got in on my daily time frame. So I didn't go very far. I only use daily time frame and the 1 hour time frame, then the 5 minutes time frame. I use the daily time frame to see the overall picture, the 1 hour time frame to see the whole strategy, what I'm trying to trade on, and I use the 5 minutes for my entry. So I would go to the 1 hour first, so that we'll see what I saw. So I had a breaker mitigation already. This is a breaker mitigation already for me. When I first came to the market, when I first came on the 1 hour time frame, I saw this, and I also saw this week. This this particular low is what created this whole buys. This low here, this sell candle here, is what created this whole buys. So I marked out the week and I kept it here. I knew that the market was going to come down, rally down with a high speed to come and mitigate these particular weeks. So I went back to my 5 minutes time frame to get my sharp entry on the sell. So I waited. Personally, I actually use SMC, but I don't make my strategy complicated at all. The only thing I look for in my strategy is break of structure, look for a nice inducement, use liquidity. Make sure there is liquidity. Make sure there is liquidity on your strategy. I looked for my liquidity, and at the same time I looked for my point of interest. When I came to my 5 minutes time frame, make sure you look at what I'm doing here. I came to my 5 minutes time frame. At first, I marked my week, the week of this candle here. This candle here that created this particular market structure shift here. Don't forget, this is our lower low here. This is not the main protected low. I first marked this particular protected low, this low here. I marked it when the market rallied down. I said, no, this is not what I actually needed. But this particular low that first broke, this low here, that the market first broke, that is my market structure shift. So I knew this particular candle is going to hold again as my order block. So at first I marked the week. When I marked the week, the market came down, came to my main point of interest here. Came to my point of interest here. What do I always look at something. When you are looking at SMC, don't forget, I can mark this as my inducement here. Sorry the way I'm talking, I'm not really good at explaining. I might mark this as my inducement here. Okay, this might be my inducement, but what I actually always look at is consolidation before going to my point of interest. This is my POI. Consolidation before my POI. Let me remove all these drawings so that you guys will understand what I'm saying. I remove my executions. So this is my POI here. I was supposed to mark my candle. I normally mark the full candles. But when I'm looking for sharp entry, sniper entry, I go with my week. And now what's the rules of an order block? The rules of an order block is that always mark the wick. The moment the wick is bigger than the whole body of the candle, mark the wicks. The moment the body of the candle is bigger than the wicks, mark the body of the candle. So I went back to go and mark the wick of these buys that created this sell here. I marked the wick that created the buy that created these cells here. So when I marked it, I put my sell limit here. And when the market came here, immediately, because of this consolidation, it turned my market it turned this strategy into an A plus strategy for me. This is an A plus strategy for me. So when it came to my point of interest, the market tagged me in immediately. And immediately I saw a nice reaction. It didn't even come back again to my entry. So we had a lot of reaction here, because the moment the market comes to your entry, you see a lot of breaker mitigation. You see a lot of um, um, volatility in the market. So this is around 12. I got into this market around 12 p.m. Nigerian time. 12 p.m. Nigerian time. So I got into the market 12 p.m. Nigerian time, and I hold this market to this place here. I hold the market to this place. So I took profit. I took some profit at this particular region here, and I drew my Fibonacci retracement tool here. I drew my fib level. Can you see my fib level? And I anticipated that the market is going to come into my 0.5 level, 0.5 level, and the 0.618 level. And I drew my Fibonacci level, and immediately I actually put another sell limit here, that I'm anticipating that this market would come here, tag me in, and I added some positions too. And we sold this market to this particular place. When we sold the market here, I went out of the market. But I knew that this market was going to clear this whole entire liquidity. I knew the market was going to clear this whole entire liquidity. And what did the market do? The market came for the whole entire liquidity. But trust me, this particular line that I drew here, I expected the market to actually create a little bit of inducement, for this particular order block here. I didn't know that it wasn't going to play as planned. So I actually hit a little stop loss from here. So let's bring out our positions, our executions rather. So I sold from here, sorry. Can you see my execution? I sold from here. This is where the market tapped me in. And I sold at the whole of the market here. I took some profit here on my MT5, and I sold the whole of the market here. I'll be dropping my MT5 executions, and you would see them on this video also. So this is where I said I expected the market here, this particular week here, because this is a strong candle that came rally down to come to this particular point of interest. It's my 1 hour point of interest. This is my 1 hour point of interest. So that's the higher time frame point of interest. So I expected that this market was going to respect this particular week, but it didn't respect the week. It came down to my this particular level, tested the level, and came back up. And I am anticipating also a sell for tomorrow. Why am I anticipating a sell for tomorrow? I will drop my A plus. I will drop my explanation of how my setup is. Okay, so let me take this out so that we have a good picture of what I'm talking about. Okay, so I looked at the whole market. I saw this particular candle. This particular candle created this whole sell here. So what am I anticipating? I make my strategy very simple. Very, very simple. I don't complicate things for myself. I make my strategy very simple. What am I looking for on my strategy? I'm looking for an order block that with an imbalance already. We have a break of structure here. We have a break of structure. We have an order block. We have an imbalance, isn't it? And we have an inducement. Don't forget, part of our strategy is inducement. Part of our strategy. After getting your order, after getting your break of structure, you get your order block, you get your inducement. What we are looking, what we are, you get your order block. The next thing you're looking for is your inducement. So the moment this market here, I was in the trade already, and I saw this inducement. I knew that this market, this candle is going to hold a lot of sellers here. It's going to hold a lot of sellers here. So a lot of sell limits will lie there. So I saw this inducement. I expected it to actually react around here, but it still came down. And you see, inducement, consolidation to your point of interest. Now, where is your liquidity? This is my inducement. Where is my liquidity now? My liquidity are all lying around here. These are a lot of liquidity here, and you see it's taking the inducement out, and I have a lot of liquidity that the market will want to come and clear out here. Can you see? The market will want to come and clear out all this liquidity. So what are we expecting in the market now? If the market gets here, we are expecting the market to clear out what? All this liquidity. All these liquidities. That's what we are expecting the market to clear out. All this liquidity. So where am I taking my profits? Why am I taking profits here? Because the whole liquidity lies here. Don't forget, where did we take our last profit? The whole liquidity that was cleared here. Can you see? The whole liquidity was cleared here. So what are we also expecting here? We are expecting that when it comes to our point of interest, we are clearing this whole liquidity. To be on the safer side, I like to be on the safer side, so I clear this liquidity. So what are we actually targeting? We are targeting a 1:4.68. So my entry is lying around my fair value gap. My entry is lying around my imbalance, my FVG. I don't know what you guys call it, either FVG, either imbalance, but it's lying around my imbalance, because this is where you don't want to expect the market not to respect this imbalance, because I expect the market to even respect the imbalance than the order block. But if it also respects the order block, I don't mind. That's also a good trade, and I expect a lot of reaction before we see a lot of downfall here. So that is my strategy, and I keep my things simple on my strategy. So if you like my strategy and you want to actually join me on this journey for this 2025 journey on how you would actually be profitable and get my trades on my Telegram channel, so do well to join me, subscribe on the channel also, and I'll be dropping my execution on a daily basis, and I'll also be sharing my strategies and my trades that I take. So thanks for watching, thanks for staying by, and voila.